Hey everybody, Smart Silver Stacker here. We are live. Welcome to another live stream. All right, so we've got some pretty big developments here in the rise of the Petro-Yuan and the continual process of de-dollarization and the undermining of the petrodollar system. And do me a favor, just put a 1 in the chat if you can hear me loud and clear, if everything's coming through. Chat's a little silent at the moment, so I want to make sure I'm not just talking to the air here. All right, so here's the headline from China Daily, and this really is a big deal, and I kind of want to tie this into everything that we're seeing occur around the world in the markets geopolitically, because this is a pretty significant development. But the headline is Crude Oil Deal in ECNY marks breakthrough. And this ECNY, that's another word or another way to describe the digital yuan, digital Chinese currency. And according to this report, there was a trade for 1 million barrels of crude oil. Now, the purchase was made by PetroChina International Corp. And it doesn't tell you here who the other party was, but this payment for 1 million barrels of oil was settled in the digital yuan, and this was via the Shanghai Petroleum and Natural Gas Exchange, something which I expect we will likely be hearing much more about as this process continues to unfurl here, as the dollar continues to get chipped away at as the currency for settling international energy payments. Now, if you're not familiar with this, if you're new to this story of de-dollarization, the petrodollar, just a quick refresher, and then there's a few other items in that report that I want to touch on. But the petrodollar system, set up by Richard Nixon, Henry Kissinger, and the Saudis back in the early 70s, 1974 is when they really reached the agreement. And this is the deal by which all of the Middle Eastern nations, the de facto leader of which in terms of oil exports is Saudi Arabia, accept dollars in exchange for their exports. Now, that's exactly the opposite of what we are seeing with this story. Now, this is, again, just kind of one in a long series of steps that we've been witnessing. Earlier this year, we had liquid natural gas from Qatar settled in yuan. 65,000 tons of Qatar gas was purchased by China via French energy giant Total Energy. That was settled in yuan. Then earlier this year, also, we saw the UAE selling India some oil for rupees. So, the petrodollar system is getting chipped away at here. Most Americans, I think, probably aren't even aware of what this petrodollar system is or how important it is for backing up the dollar status as the world reserve currency. But it is critical, and it's one of the things that creates a tremendous demand for dollars around the world, because if you want to buy oil from OPEC nations, you got to pay in dollars. And so, if that starts to change, that's going to have some big impacts on the value of the dollar, because all those petrodollars around the world, they're going to start flowing home. Now, to give you an idea of some of the other things here with the yuan, and keep in mind this is China Daily, so this is putting a pretty rosy picture on things here from the Chinese point of view. We had another deal recently. This French energy company, I think I'm saying this right, Engie, not 100% sure about how to pronounce that, but they're supplying another 65,000 metric tons of liquid natural gas to the China National Offshore Oil Corporation. And then another thing they mention here in the article, which I think is interesting, is the latest data released by the People's Bank of China, that's the country's central bank, show that the value of cross-border RMB, that's the renminbi, another name for the yuan, settlements under the current account totaled 10.16 trillion yuan in the first 3 quarters of this year. That's up 35% year on year. So the yuan is still seen as a relatively small player in international markets. It's the 5th most widely held reserve currency, and the trend, however, for it is to be used more so. And so despite the fact that the dollar still commands the lion's share of international payment settlements, and the yuan is a relatively minor player, it's clearly gaining ground. It's not so good for the US dollar. Now, at the same time that China is transitioning towards this petro yuan, they're trying to get fossil fuels priced predominantly in yuan. That's kind of their end game here. It's a way to undermine the petrodollar. They're also divesting themselves of U.S. paper debt instruments. You can see here from the latest data from the U.S. Treasury, Table 5, major foreign holders of Treasury securities here. Latest data is for August. China has dumped another $15 billion or $16 billion worth of U.S. Treasuries. And if you look at the total that they've dumped over the past year, it's greater than $100 billion worth of debt. So, clearly the Chinese are attacking the dollar from multiple angles here. And, I don't really blame them for dumping the U.S. Treasuries. They do it because they are concerned about sanctions. And Alex in the chat here is saying de-dollarization is fake news. Nothing will replace the dollar except gold itself. Dollar will be king until the end of the fiat system. Well, that's an interesting point of view. I would not be surprised if at some point in the future we do see other fiat currencies that predominate. I think just from a historical standpoint, that's kind of been the trend. Although the dollar's immediate successor could very well be gold. And the thing is here, we don't need to see the dollar completely supplanted by the yuan to have a significant impact on the purchasing power of the dollar. You just need to see it lose a significant amount of market share. And if you were to see, say, OPEC come out with an announcement that they would be pricing their oil exports in non-dollar currencies or local currencies, that would have a massive impact on the value of the dollar. And so, there's nothing fake about any of the news I'm sharing with you. This is all actually occurring. Of course, the U.S. also massively expanding the supply of debt. Just like to point that out, that the supply of U.S. debt on the market is exploding because the Chinese are dumping large quantities of it. And that could accelerate very rapidly if this current geopolitical conflict that we are in the midst of, this nascent World War III, accelerates. You could see them dump a lot, but we're dumping a lot of debt onto the market. We're now at $33.66 trillion and climbing, and that's probably why we're seeing the interest rates on U.S. Treasuries spike up so much. Today, a little bit of a reprieve. We're down to 4.83%, still the highest levels since 2007, immediately before the financial crisis and the Great Recession. But we did actually open today now I read some headlines that said the yield on the 10-year went over 5%. I didn't see that. It's not reflected on this chart, but perhaps this data is not entirely accurate. This is from Yahoo Finance, but still, if you zoom out in any way, you can see that the sell-off in U.S. debt and the spiking yields on treasuries is hardly over, and probably just a bit of a reprieve here, especially in light of the fact the amount of debt that is being sold onto the market. You get the Fed selling treasuries onto the market via quantitative tightening. You've got de-dollarization in China, the second largest holder of U.S. Treasuries, dumping them by the billions, and you have the Treasury creating tons of new debt out of nowhere, dumping it onto the market. And so likely these yields are going to continue to move up. I did want to briefly take a look at the gold and silver prices and what they're doing here before we get into some more information about this Chinese sale of oil or purchase of oil, a trade settled in Chinese yuan. So here's the gold price. You can see we had rates coming down today, kind of a mixed bag for rates. They opened up, closed down. Gold pretty much holding firm here. We're at $19.84. We did go up over $2,000, and this is the December futures contract. This is the futures contract with the highest volume. So that is what Yahoo Finance likes to quote as their spot price. I know some people have been asking why spot prices are different places. Well, this isn't actually the spot price. This is the price of the futures contract with the highest volume, but this is often cited because this is like the most liquid gold contract right now. But you can see on Friday it went up over $2,000. Today, basically flat on the day. Trading within a very narrow range. I feel like gold is gathering some steam here. The Middle East is still a powder keg and likely to accelerate into a broader regional conflict. It's my analysis of it. And I think when that happens, we could see gold really take off. But it might not be that, if things in the Middle East calm down, if the cooler heads prevail, if we manage to avoid World War III from kicking off there, I still think we're going to see much higher gold prices here, whether that be from something that the Fed does, or whether it be from, a financial crisis or some other geopolitical event. There's just too many factors right now working to push the price of the precious metals to the next level, which is something I believe we are on the cusp of. If you look at the long-term chart of gold, there's a large cup and handle formation. The resistance in the handle is about $2,100. If we get gold above that level, I believe it's going to break out. Silver, same kind of deal, really. I mean, mostly trading water, a little more volatile than gold, but still just kind of waiting for the other shoe to drop. Now, of course, if you want to get some gold and silver, make sure you check out sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. If you'd like to support this channel, great way to do that is to support our sponsors. Now, I want to talk a little bit about how what we're seeing play out in the Middle East may have to do with the petrodollar and the attempts by the BRICS nations, the Global South, China, trying to undermine this system, which is critical to the dollar's status as the world reserve currency. Now, it's not too often I agree with this guy that is pictured here. In fact, almost never. There's very little I like about him. But one thing that he has said here in one of his recent speeches was that these attacks were designed to disrupt Saudi-Israel normalization. And I think that may actually have some bearing on what we're witnessing here. The president was working on this normalization deal with Saudi Arabia and Israel. Part of the deal was the Saudis would get nuclear technology, like nuclear energy production from the U.S. They would get new weapons, a new ironclad security guarantee from the U.S. And in response, there were a couple things. Big one was that there would be a Palestinian state created, and the Saudis would have to continue to sell their oil in dollars. That was really, I think, the critical underpinning of this deal. And this is really what the president was looking for. He was looking to defend the petrodollar system. Kind of a Hail Mary pass, if you ask me. And it just goes to show how important the petrodollar system is to the U.S., that we were willing to offer the Saudis nuclear technology and a Palestinian state. But let's just say you wanted to undermine the petrodollar. Like, let's say you're China. Well, it's awfully convenient now that, this war has broken out. And, I'm not trying to get conspiratorial or anything. I'm just kind of giving you my analysis. So, whether they had a hand in fomenting this crisis, or whether they're just going to seize on the crisis as an opportunity to deepen their geopolitical influence in the Middle East, this is highly beneficial to China's plan for de-dollarization. And just a reminder, we know that the Chinese have actively been seeking to undermine the petrodollar. This is not a secret at all. Xi Jinping was visiting the Saudis in December of 2022, the Gulf China Summit. Here's a video of it right here on your screen. He was petitioning the Gulf nations, the OPEC nations, to sell their natural gas and their oil, their energy exports on the Shanghai Petroleum exchange, priced in Yuan. And, look at what is happening right now. Less than a year later, you've got the first crude oil deal in digital Yuan being settled on the Shanghai Petroleum and Natural Gas Exchange, right? So clearly their plan is working out here. And got to remember, there was, wrong slide, here we go. China just brokered this deal earlier this year between Saudi Arabia and Iran. And now, following the outbreak of conflict in the Middle East, we are seeing the Saudis and the Iranians become closer than ever. Two countries with traditionally have had, contentious relations, rather than the normalization that Biden was seeking and that the U.S. was seeking, the Hail Mary pass to save the petrodollar system. That's all done now. Saudi Arabia puts Israel deal on ice amid war, engages with Iran, sources say. This is from October 13th from Reuters. So someone in the chat here says he's smart, no doubt, but he repeats anti-Chinese rumors and then weekly says, hey, I don't know. Well, listen, first of all, I don't know. I'm not there. I'm not even a geopolitical analyst. I'm just telling you what I see. And this is not an anti-Chinese rumor. This is just my analysis of the situation. I mean, the conflict in the Middle East is certainly benefiting China and their attempts to undermine the dollar. And the reason I'm even bringing this up is because this is going to have huge implications for the purchasing power of the dollar. And, I'm not shilling for the Americans. I'm not shilling for the Chinese. I'm just telling you what I'm observing. If you don't think that, when you ask cui bono, which is a great question to help you get to the bottom of what's really going on, the Chinese absolutely benefit from this. They're seeing the Saudis driven into the global south. That's what we're witnessing here because of this conflict. I mean, you already have the BRICS organization, that's currently Brazil, Russia, India, China, and South Africa, inviting 6 countries, including Saudi Arabia and Iran, Egypt also on that list, by the way, and the UAE. They're all going to be joining BRICS very likely in January. I mean, as far as I know, they've just been invited, but more than likely, this is going to take place, especially in light of what's going on. The petrodollar is in a lot of trouble, folks. This system is 50 years old, and it's likely coming to its end. And that's not that unusual for systems that are related to fiat currencies. The dollar was backed up by gold up until 1971, at least in an international sense. It was convertible to gold at a fixed rate of $35 an ounce. Nixon ended that arrangement in 1971 because of the fact that everybody was going to take all our gold because we were printing too many dollars to fund the warfare welfare state here at home, the guns and butter economy, the Great Society of Lyndon B. Johnson, plus the Vietnam War. And so he had to end that, but then he needed to cook something up to replace the gold backing with. Well, he came up with the petrodollar. That has been helping to bolster the U.S. dollar status ever since, but that could be coming to an end very soon. So, get prepared, folks. We'll have to continue following this. We'll see what kind of an impact this has, but this is continuing to play out. I mean, we've been talking about it on this channel for some time now, and it's certainly not anti-Chinese to report and, observe what is actually taking place. I mean, I strive to maintain objectivity on this channel, but that also means not burying your head in the sand when you see that things are beginning to get stacked against you, So I'm going to keep stacking gold and silver at these prices. I still think that they're the most undervalued assets in the world, especially silver at $23 an ounce. I mean, yeah, we're not at the lows we were last month, but I still think that this is the number one asset that eventually folks are going to come to realize that, they're going to need some kind of protection against de-dollarization and the dollar's losing its status as the world reserve currency. But right now, ask yourself why that's not already happening. When you go out onto the street, you talk to the average person on the street, how many of them are aware of the petrodollar? How many of them, even know what that means? How many are following the fact that China is attempting to usurp the petrodollar and create their own system based on their own digital currency? I mean, very few. But you can ignore reality, but you can't ignore the consequences of ignoring reality. So when inflation soars out of control and the dollar begins to lose its status as the sole global reserve currency, it will become impossible to ignore. And I think that, by then it could be too late. So when you're preparing for these things, definitely better to be early rather than late. That's why I am continuing to stack whether the price of gold and silver goes up, down, or sideways. And, I don't give financial advice on this channel. Nothing here should be construed as financial advice, but you might want to, take some of these factors into account when you determine how you want to prepare for this. But that's it for today, everybody. The Petro Yuan is on the rise, and we are one step closer to the end of the petrodollar with this settlement of a payment for oil in not only yuan, but digital yuan. And that's the type of system that is being set up. And that's likely where the future of energy markets is going to head. So anyway, let me know what you think in the comments down below. Stay safe and happy stacking, everybody. Thanks for watching. Make sure you smash that like button, please. That really helps get this information out there, and I greatly appreciate it. I'll catch you next time. Smart Silver Stacker, out.